Hello, good morning, and welcome. Today, we're looking at banks, not in the sense of how they constantly do you over with fees, charges, penalties, and dictatorship levels of interest rate spread. Instead, we're looking to see if it's possible for an individual to profit from the banks. In particular, we're looking at the takeover of Touchstone Bank by First Bank. These two regional banks, both based in Virginia, have agreed to merge, and once complete, will form an entity with a market capitalization of approximately $150 million, total assets of $2.1 billion, with $1.5 billion in loans and $1.8 billion in deposits. I hope you find the content useful, and if you do, you can generate your own risk-free rate of return by making a deposit in the like button. So, let's get to it. First Bank is a community bank that was established in 1907 in Strasburg, Virginia. First Bank offers the standard banking fare of loans and deposit products through 20 branches and its online platform. In addition to providing traditional banking services, First Bank operates a wealth management division. First Bank also owns First Bank Financial Services, Incorporated, which invests in entities that provide investment services and title insurance. Touchstone Bank, which is headquartered in Prince George, Virginia, was established in 1906 and is clustered around South and Central Virginia. The directors of the company recently enacted an audacious expansion plan by opening branches in North Carolina. Being a bank, it offers pretty much the same services as First Bank. In March of this year, First Bank, no doubt awed by Touchstone's audacity in breaching the Carolina border, made a bid to buy the whole company in an all-share deal. This proposed takeover was approved last week by the Federal Reserve Bank of Richmond and the Bureau of Financial Institutions of the Commonwealth of Virginia. All that remains is shareholder approval from the two companies, which is expected to be received on the 29th of August. The more pressing question for us is, can an investor make a return from arbitraging this takeover and actually take some money from the banks? Let's take a look at the numbers. First Bank is offering 0.8122 of its own shares for each share of Touchstone Bank. At today's prices, this means $13.65 in value for each Touchstone share trading at $13.40. In order for an arbitrager to take a position in this deal, they need to take a long position in Touchstone and short 0.8122 shares of First Bank for each Touchstone share. With an estimated close in December, we have a holding period of 126 days and an expected dividend of $0.30 payable on the short position in First Bank. We have an expected downside price of $9.81 on Touchstone and an upside price of $17.55 in First Bank should the deal fail to close. When we input all of this information into our calculation sheet, we can calculate the expected risk and return. An investor taking a position in this takeover today can expect an unleveraged return of 1.09%, which translates to an annual rate of return of 3.17%. However, even with a fair probability of the deal closing, the narrow spread and expected share price volatility should the deal fail to close results in a risk-adjusted return of negative 10.91%. Should the deal fail to close and the share prices return to their pre-takeover levels, an investor can expect a loss of 23.19% when closing out the trade. If an investor were to go rogue and apply 50% leverage to the deal, possibly by hitting up one of these banks for a short-term loan, the return would actually fall to negative 0.98% or negative 2.89% on an annual basis. This is due to the duration of holding, the cost of debt, and the payment of the short dividends skewing the return to the left. So the question now, do you think an intelligent investor would risk losing 23% of their capital for an expected return of 1%? This brings us to the fundamental question of investing. What is an appropriate level of risk to take to generate an expected return? What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.